9:38 is the time. Need to Know with Jeff Angelo is the program. Happy Friday to you. Yesterday we spent a lot of the show talking about the new inflation numbers because, they were not good, man. And a lot of folks are in the national media, I notice, warning that it's about to get worse in the healthcare industry. The healthcare costs and healthcare insurance premiums are about to skyrocket. And my go-to guy to talk about this with is Paul Seegert. Paul's a managing partner at PCS Advisors, which is actually a health benefits consulting company. So he is absolutely a guy to talk to about this. Hey, Paul, welcome back to Iowa Radio. Good morning.
Glad to be here, Jeff.
So, Paul, why are people in the media sounding the alarm about skyrocketing healthcare premiums and healthcare costs over the next few months?
Well, they've held out as long as they could. I think a lot of us knew it was coming, but it's delayed in the way that it impacts healthcare because of the fact that health insurers go out and negotiate multi-year contracts with hospital systems and providers. And a lot of those were negotiated before all of this happened in terms of the pandemic and everything that we've been through lately and inflation overall and labor shortages. So there's all this perfect storm of factors that are driving up cost. In fact, it's been so significant that over half of the hospitals in this country will post a loss this year because their reimbursements have stayed the same. And now you can be sure as they come back to the negotiating table with insurers, they're going to be aggressive. And they'll need to be to cover their rising costs. So, Paul, how high are we talking here? Well, healthcare inflation usually runs 2 to 2.5 times CPI. That's a scary thing to say, isn't it? So it's not funny, but you have to laugh or cry sometimes. Yeah. And so even before these prints, most recent prints, I mean, you go back 6 months, we were already projecting 12 plus points in healthcare inflation that would stay elevated like that for the next couple of years. Wow. And that was before all this inflation really took off. So if it were just what we were projecting, say, 6 months ago, that would still be scary. But I think it could be even more than that. So, Paul, if we're talking huge double-digit increases in our healthcare costs, our healthcare premiums, that's going to be an issue. You and I will be talking about it. The politicians will feel a need to jump in. Can they do something positive, and what should they avoid doing here? You know what? It's always, this is really the question we always have to talk about, and what they end up doing is subsidizing something rather than fixing it. So what we'll see, which we already saw with the CARES Act and some of the most recent legislation, they've extended subsidies through 2025. So if you're getting your health care through Medicare and Medicaid, you will be insulated from this. Okay. That doesn't mean the costs aren't going up. They are, but you won't feel it as an individual. If you're in an employer plan, you're going to feel it. The employers are going to get nailed. The people in those plans are going to get nailed. And that's going to be continuing a trend that's been going for some time. And here's the big picture that I see. We've created a situation where lots of small employers have said, I can't even afford to provide health care to my people anymore, or my people would be better off just going and getting it from the government, so they stop. And 20 years ago, 67% of us got health care at work. Today, it's 49%. We just fell below 50%. And that's a really scary situation because of the fact that hospital systems, provider groups, the whole system out there charges employer plans more when they show up to make up for the fact that they lose money when a government payer shows up, Medicare and Medicaid. So we've got a dwindling supply of commercial payers that are providing the profits largely for a system that we all benefit from. Well, Paul, what's make it more inflationary? Right, Paul. I mean, that's where I'm going to go with this because what's amazing to me is we've been talking on the show in the last few days about what inflation is so that everybody can just get back to basics. It's too much money chasing too few services. And what you're saying, Paul, is what happens with healthcare is the rates go up, so our government subsidizes, it shoots more money into the system, which is a self-perpetuating problem, isn't it? It is. And then it's even more sharp and worse in this market because we have this dwindling supply of employer payers. And so then the system has to look to those payers and say, we're going to have to charge them even more. Yeah. So employers that are listening have been feeling that for some years, and the bad news is it's looking like it's going to get worse because of the fact that over on the government side, they're reducing reimbursements again. They reduced them already this year a couple of points. They're reducing them. They're set to reduce them another 4 points right now.
Right.
So they're reimbursing the hospitals less, and then they have to turn around and say, well, shoot, these dwindling employers, they're going to have to pay even more. We really have to do something about that.
Yeah. So, Paul, I'm as optimistic a person as anybody, but let's talk about this. I mean, we're going to talk about reducing reimbursements. So I already have rural hospitals in Iowa shutting down. So that seems to exacerbate the problem. And then you're going to have more government spending on government-covered health care. And I mean, there's just this point, Paul, where you keep trying to shift the cost on the private sector. So more employers stop. I mean, they just send an email to their employees saying, I can't afford to insure you anymore. I mean, this is all bad in 2023. I'm sorry to have to put it that way, but that's what you're saying, right?
I am. And in fact, Rand Corporation just did a study. It came out 3-4 weeks back. They looked at 4,000 of the 6,000 hospitals in this country, and what they confirmed yet again was that employer plans are being piled on.
Yeah.
They said employer plans are paying 224% at the same facility for the same procedure of what a Medicare or Medicaid plan pays. Well, and I think that's very kind. We've seen it much higher than that. And when you talk about rural hospitals shutting down, it's because almost all of their clientele is Medicare and Medicaid. And they're losing money on those transactions. They need 120 or 140% of what they're collecting, and then the government's going to turn around and say, hey, we're going to pay you even less. So, of course, they're shutting down. I mean, the government needs to pay its fair share. It's incredibly inefficient. We're spending, say, $20,000-ish a person for the government to be doing this, and it's incredibly inefficient, and it's not making its way to those hospitals that need those dollars to stay open.
Paul Seegert, he is with PCS Advisors. He's my go-to guy on these issues, and you can tell why. Paul, thanks very much for joining me today.